Good afternoon, everyone. As many of you know, my name is Prue Klein. I'm the Marketing Manager here at Wine Communicators of Australia. Thank you for joining us today. Today's presenter is someone that a number of you are most probably quite familiar with and have heard present before. We have Peter Bailey, Market Insights Manager at Wine Australia. Thank you, Peter. Peter today will be sharing with us the latest trends in key export markets in Asia and provide some really valuable insights into the opportunities for Australian wine in these markets. We've allowed plenty of time to ask questions to be answered at the end of the webinar. However, feel free to send these through to me as they come to mind. You can do this via the Q&A button at the bottom of your screen. As per usual, this webinar will be recorded and a copy of the recording will be sent to you in 24 hours following today's presentation. It is now my pleasure to hand over to you, Peter, for today's presentation. Thank you.
Thank you, Prue, for that kind introduction and for giving me the opportunity to talk today about Asian markets. To start, I'll provide some context into the current operating environment that the Australian wine sector is faced with. And then I'll go in and discuss the agribusiness expansion initiative and then looking at some of the trends across those key markets that initiative is focused on, and then looking at some of the individual markets in more detail. And to finish, I'll provide a brief update on some of the Wine Australia marketing activities planned for Asia. And I also just want to apologise in advance. I'm just getting over the dreaded Rona, so my voice is a little bit scratchy and my chest is a little bit ordinary at the moment. So if I am coughing at all throughout this presentation, I do apologise, but there's not much I can do about it. And there's also a lot of stats to cover today, so hopefully I won't do an Anthony Albanese and stuff up any of the key figures. Starting with the current operating environment, there'd be no surprises to anyone listening in today that the Australian wine sector is faced with an unprecedented challenging operating environment. We've had the global impacts of the COVID-19 pandemic. We've got the loss of the $1.2 billion China export market due to the imposition by the Chinese government of import tariffs. We've also got increasing competition from heavily subsidised imported wines. We have rising input costs and global shipping difficulties, which are making it more difficult to get Australian wine into markets. And then on top of that, in 2021, we had record wine production in Australia, which combined with a reduction in overall sales volume, saw inventory levels and stock to sales ratios increase in the 2021 financial year. And these increased stock levels are likely to put pressure on tank capacity for some wineries leading into this 2022 vintage, and maybe some downward pressure on particularly around red grape prices. And global market conditions definitely have a significant impact on the success of the Australian wine sector, as we've been a highly reliant export-orientated sector for many years. With around 60 to 65% of our production being exported every year. And with supply and demand fairly well balanced in the domestic market, there's limited scope for expansion here, meaning future growth is highly dependent on growing our share in the international marketplace. And until the imposition of these import tariffs on Australian wine, mainland China had really fueled the growth in Australian wine exports over the past 5 years particularly, with the value of exports to China peaking at $1.2 billion in 2020. However, since that time, exports to China have fallen to 29 million in 2021. Now that's a loss of $1 billion, and offsetting this decline will take some time. There is no new China to offset China. So the sector really needs to focus on intensifying its efforts in existing markets and diversifying and growing into new markets. And we're already exporting across 110 markets around the world. And we are making progress. In 2021, exports to all markets excluding China increased by 7% in value to $2 billion. And this is the first time that exports excluding mainland China have reached $2 billion for a calendar year since 2009. And importantly, the largest drivers of the increase in value were Asian markets of Singapore, Hong Kong, South Korea, Taiwan and Thailand, driving that growth over the last 12 months. In response to the China situation and as part of the Australian government's close to $73 million agribusiness expansion initiative, Austrade and the Department of Agriculture, Water and the Environment are helping Australian agribusinesses expand and diversify their export markets. This includes scaled up export support for Australian agri-food wine exporters through Austrade support services. There's greater access to market intelligence. And I know they have produced some really useful export guides for key Asian markets, which are freely accessible via Austrade, or we've also put them on Wine Australia's website. There are matched grants for government and industry associations to work together on market expansion and additional technical experts to open and expand market access. For Wine Australia, we're working in collaboration with Austrade and have identified a number of priority markets in the Asia region to grow opportunities. And this was based on a wide range of economic and wine market analysis. And those 6 markets are Japan, South Korea, Taiwan, Thailand, Vietnam, and Indonesia, which will be the focus of today's presentation. But I've also included Singapore and Malaysia in the analysis as well, as they are key trading hubs within the region. And also India has been included. There's been a lot of press in the last few days around India, and I've included that as well as a potential destination for Australian wine in the future. But essentially, it's these 9 markets that will be the focus of my presentation today. Before delving into the market trends, I'll just touch on the economic conditions across the 9 markets. No surprises that GDP growth fell in 2020 for all markets, except for Taiwan in this group. And this is not unexpected in light of the pandemic. And of these markets, India suffered the biggest decline in 2020 due to a really significant wave of COVID-19 infections. And as such, their GDP growth in 2021 is actually expected to be much higher than 2019 because it is growing off a much smaller base. And in 2021, all markets were expected to grow at a higher rate than 2020. However, for markets such as Thailand, Vietnam, and Indonesia, the expected 2021 growth rates are very similar to their pre-pandemic performance in 2019. And what this suggests is opportunities for export growth will open up in the next few years as these markets come out of the impacts of COVID. Starting with market size for these 9 markets, total wine consumption in this group is estimated at $6.1 billion in retail value and 47 million 9-litre case equivalents in volume. And to put this in context, the total volume across those 9 markets is roughly the same as what is consumed in Canada. So one market doing what these 9 markets are currently doing. Within these, Japan is by far the biggest by consumption, and it's classified as an established market according to Wine Intelligence. And 60% of consumption in that market is imported wine, but it does have the lowest average value of the group that we're covering today. South Korea is now close to being a $1 billion market and is forecast to keep growing, and I'll touch on this a little bit later. And then the rest of the markets are classified as either growth or emerging markets, according to Wine Intelligence, and as such have much smaller value and volume of total wine consumption. And they are all valued at under $500 million in total market size. I guess the key takeaway, with the exception of Japan and to a lesser extent South Korea, is that these do represent small but growing markets for wine, and none on their own will offset the loss in trade to China. Looking at the overall trends, as wine is a relatively new category in most of these markets compared to the more traditional Western markets, a higher proportion of wine consumption takes place in the on-trade. And then due to restrictions in the on-trade during the pandemic and consumers trending towards value and what they know, total wine consumption did suffer in 2020. However, 2021 was expected to be a stabilising transition year before recovery takes off in 2022 and beyond. Now, we're still waiting for the 2021 data. So the information I'm showing here is what IWS had forecast late last year. Although not all markets have grown in the past 5 years, all are expected to grow in value in the next 5. And with volume overall across those 9, expected to grow at 2% per annum and value at a slightly higher rate of 3%. Markets like South Korea and Singapore have grown exceptionally well in the last 5 years. But as their markets grow, the growth is expected to be tempered somewhat in the next 5 years. So as the size of the market grows, you can't keep growing at the same sort of rates. High growth rates are expected from the smaller markets, such as Indonesia and Vietnam, where consumers are starting to get a greater exposure to wine through more entry-level wines. And the growth is coming off a much smaller base. Looking at per capita consumption, growth has been particularly strong in per capita consumption in Singapore and South Korea, which is driving the overall consumption across the region, which you can look at, excuse me, on this chart. Clearly, Japan has the highest per capita consumption in the region at 2.4 litres per person, but it is in decline, and I'll touch on that later in the presentation. South Korean per capita consumption is on the rise and is getting close to 1 litre per head. But then per capita consumption rates drop off considerably to Indonesia at 0.02 litres, which is mostly driven by tourist consumption in that destination, and India at a very low 0.01 litres per person. Just to put this into perspective, Australians consume on average 20 litres per person. So I guess the key takeaway from this slide is that there is upside in consumption rates in most of these markets within Asia. By price point, most of the wine sold across the region is in the commercial sector. So in other words, wine sold at a retail price of US $10 per bottle equivalent or below. And within this sector, Singapore has the largest share of premium wine sales at 42%. And while some of the highest GDP capital rates in the world and high levels of tax on alcohol in that market, it's probably not surprising that the prices are much higher in Singapore. On the other hand, India and Indonesia have a high level of entry-level wines due to their relative inexperience with the category. However, the premium segment is expected to grow as consumers become more knowledgeable about wine over time across a lot of these markets. And looking at the trends across the major price segments, both segments are forecast to grow for all markets in the next 5 years. So no matter what your business model or focus, there are growth opportunities for everyone, according to the forecast from IWSR. The markets where premium growth is expected to outpace the commercial segment are South Korea, Singapore, Thailand, Vietnam, and Indonesia. South Korea definitely has been the standout for premium wines over the last 5 years. But as I mentioned previously, the growth rate is forecast to slow as the size of the market grows, but it's still fairly healthy growth rates at sort of 4% per annum in premium wine. And in general, off a smaller base, premium wines are forecast by the IWSR to grow at a slightly higher rate than the commercial wine segment in the next 5 years. As expected, most of these markets have a high share of imports. In fact, Singapore and Malaysia have no domestic grape wine production, while Taiwan and Thailand have very little. India does have some wine production and as such has the lowest imported wine share. There is around a million cases of domestic wine consumed in India each year, and imports currently face very high duties of 150%. And over the previous 5 years, as mentioned, South Korea has been the standout for growth, but also India has shown some solid growth in imports, albeit off a very small base. But I guess the good news for this slide to take away is that imports are projected to grow in all markets in the next 5 years. Indonesia at the highest rate of 9% per annum, but Japan at the slowest rate of just under 2% per annum. And as mentioned earlier, Japan is a relatively mature wine market compared to the others in this region, hence the growth rate's not quite as strong as these emerging markets. Looking at where Australia sits overall, we have a relatively small share of wine sales in the region, 7% by volume and 10% by value. However, it should be noted that, in the overall scheme of things, Australia only produces 5% of the world's wine. So it does actually over-index for its size in Asia. And probably contributing to the overall small share is the lower ranking in the bigger markets of Japan and South Korea. So we're ranked lower in those bigger markets, hence it's driving down the overall market share that we've got across the 9. We are the market leader in some of these markets. So Malaysia, Indonesia, Thailand, India, and Singapore, we are the leading imported wine category. But as mentioned, in Japan and South Korea, we are ranked number 6 as an importer in both of these markets. And Chile is the number 1 source in both markets, followed by the big European producers of Spain, Italy, and France, and then wines from the US. In Taiwan and Vietnam, Australia's volume and value shares are slightly higher, and we are sort of ranked around 3 in those 2 markets. So, a much better profile. Looking at Australian exports, as mentioned early in the piece, we do export to over 100 destinations around the globe. And these 9 Asian markets accounted for 5% of the volume and 12.5% of the value of Australian wine exports in the 2021 calendar year. However, if you remove the top 3 export markets for Australian wine, which is the UK, US, and Hong Kong, which make up 52% of the export value, so you remove those from the piece, these 9 markets account for 39% of their value of all other markets outside these top 3. And all these 9 markets are within the top 30 markets by value. As you can see on this slide, there is a fairly high average value share, which is compared to the volume share, and this highlights the relatively high average value of Australian exports to the region. In 2021, the average value of exports to the 9 markets was $76 per case, and if you just focused on bottled exports, it's $106 per case, which is actually more than double the average of all other destinations of $51 per case. So, with double the average price for a bottled wine going into these 9 regions compared to all other destinations for Australian wine. And Singapore is the biggest destination by value amongst these 9, particularly due to its high average value. But I should note it is a trading hub, and some wines are dispersed to other markets within Asia. They don't all stay within Singapore. They do get sent elsewhere once they hit that market. By volume, Japan is the biggest, but it does have the lowest average value amongst the 9 markets. And this is partially due to a large proportion of Australian wine being sent to Japan unpackaged and then bottled in market. By variety, 82% of the value of exports across the 9 markets is red wine, with whites at 11%. And this is a really important note, given that Australia's exports to mainland China were predominantly red. So if we're looking at other markets that are taking red, these Asian markets are definitely predominantly looking at red wines from Australia. And within reds, Cabernet and Shiraz account for over 3/4 of the value of exports, and they are driving growth across these markets. Japan does stand out, has a higher share of white wine at 30% of the value of exports, and within this, Chardonnay is the most popular variety for Japan with a 29% share of the value. And also Japan is a significant sparkling wine market, and I'll touch on that a little bit later when I look at Japan individually. Singapore has the widest range of varietals being imported. 96 different varieties were exported there from Australia in 2021. Perhaps its trading hub status is the main reason for this, given that it's being dispersed to a number of other different markets. And then the smallest repertoire of varieties belongs to India. Only 19 different varieties were exported there during the same time period. So I guess the key takeaway from this slide is that markets are predominantly taking red wine, which is important when we're seeking alternative markets to China over the next few years. Looking at the performance of Australian exports, after we were hit fairly hard in 2020, down 8% in the COVID impacted 2020 year. However, exports rebounded strongly in 2021, growing by 49% across these 9 markets. And it's also important to note that the number of exporters to these markets increased. So in 2020, we had 519 exporters to these markets, and this grew to 599 in 2021. I think scale is pretty vital if we're going to offset the loss in exporters to China. So we need more and more exporters driving growth into these markets. For Australian exports, South Korea has also been the standout over the last 5 years amongst these, and growth accelerated in 2021, up 74%. And this was driven by growth across all price segments, and increasing wine consumption, and the Korea-Australia Free Trade Agreement have definitely fueled growth to this market for Australia. Singapore has also been a standout in exports. The value of exports to Singapore more than doubled in 2021, while the 5-year compound annual growth rate was 19% per annum. It is now Australia's 4th biggest destination by value. Again, it's important to note that Singapore is a major trading hub within Asia due to its proximity and access to other destinations. And with wine tax regulations and accessibility less stringent than in some other nearby countries, traders can take advantage of the hundreds of bonded warehouses that can store wine with excise taxes and GST suspended until they're removed from the warehouse for sale or consumption. So that's one of the reasons that Singapore has grown significantly over the last few years. People growing into Asia, but using that as a trading hub. I'll now look at a close look at some of the individual markets, starting with Japan. Japan has a population of 125 million people, highly educated and quite affluent in comparison to a lot of countries around the world. It is one of the world's biggest consumer markets and the 2nd biggest wine market within Asia behind China, with 33 million cases of wine sold at a value of $3.5 billion. And to put this in context, this is 3 times the size of South Korea's wine market. Given it's a more established market, it does have a higher per capita consumption than most Asian markets. However, the major issue, for wine is that the population is aging, and younger consumers or wine consumers are not drinking as much as the older generation. And Japan has one of the longest life expectancies in the world, but also one of the lowest birth rates. And according to the Stats Bureau of Japan, nearly 3 in 10 people are now more than 65 years old, and over 65s outnumber the 20 to 35-year-olds by a factor of around 2 to 1. And Wine Intelligence reports that around 2/3 of regular wine drinkers in Japan are aged 55 years or older, compared with just 10% of regular wine drinkers in the age group, from legal drinking age to 34. The over 55s tend to be less experimental with their approach to wine, and they're more price conscious, and also have the lowest category involvement. But the younger Japanese consumers are more adventurous and higher spending, and they're also more open to consuming Australian wine in comparison to the older cohort. So it would be this demographic that would provide growth opportunities for Australian wine in the future. That said, we are ranked 6th in imports, and therefore the best opportunity probably lies in taking market share from the likes of Chile, France, Italy, and Spain by targeting these younger consumers. Future growth may also be aided through the import tariff from Australian bottled wine, going to 0 in 2021 after a 7-year phased reduction period through the Free Trade Agreement with Japan. We should note that the tariff on bulk wine has been 0 since the FTA came into force, hence that may have driven some of that increase in bulk wine in recent years. But the bottle tariff now puts Australia on a level playing field with market leader Chile and the big EU producers in France, Italy, and Spain. So that's a really important note that we're now even with these, so we become more competitive in that bottled wine space going forward. In the last 5 years, Australia's growth to Japan has been subdued at 1% per annum. However, it was stronger in 2021 at 6%. And Australia has a 4% market share compared to France, Chile and Italy, all much higher compared to us, and even the US at 6%. So, there is upside to be had. And Wine Intelligence research over the last few years shows that, among Japanese regular wine drinkers, Australian wine outperforms each of these competitors in being food friendly, value for money, authentic and sustainable on these sort of measures they asked, Japanese wine consumers. So these are the areas in which the Australian wine category can perhaps differentiate itself from the competitive set in Japan. And while red wine is the dominant wine choice in Japan, sparkling wine is also very popular in Japan, to the extent that the country is the world's 7th biggest sparkling wine market. So this may also present an opportunity for Australian wine, as in 2021, only 9% of the value of Australian wine exports to Japan was sparkling wine. So there could be potential there for that category going forward. Looking at South Korea, population of 32 million, and like Japan, very well educated and relatively affluent. And South Korea is now the 3rd biggest wine market in Asia and is growing. South Korea's economy has fared remarkably well throughout the pandemic. In 2020, the GDP managed to only dip by 1% year on year compared to Australia, which dropped 2%, and Japan with a 5% decline. And South Korea's GDP managed to grow almost by 6% year on year in the second quarter of 2021. And global data has ranked South Korea second highest as far as economic recovery post COVID-19 after Singapore, and mainly due to its GDP growth, low number of COVID cases, and low unemployment rate. That said, during the pandemic, total consumption of alcohol declined by 3% year on year in 2020. Beer and soju remain the overwhelming beverages of choice among South Korea's alcohol consumers. However, during the pandemic, at-home consumption changed. Some alcohol consumer preferences towards grape-based wine, with consumers switching from drinking soju and beer with colleagues after work to drinking wine at home, which led to the volume of wine consumption growing in 2020 in South Korea, building on top of the already excellent growth rate of 6% per annum between 2014 and 19. And for Australia, after growing by 74% in 2021, South Korea is actually on the verge of overtaking Japan in the value of Australian wine exports. And the average value of exports to South Korea at $7.47 per litre is actually more than double that to Japan. And the growth rate to South Korea has been exceptional over the past 5 years, with a CAGR of 27%. So 27% per annum over that five years. And the number of Australian exporters to South Korea continues to grow. In 2014, we had 70 exporters to South Korea. In 2020, that grew to 135. And in 2021, this number had grown to 182. So significant growth in the number of exporters going to Korea. The Korea Australia Free Trade Agreement, or CAFTA, which entered into force in December 2014, has really provided a stimulus to growth opportunities in South Korea. And the result was, unlike Japan with that sort of phased reduction, there was an immediate elimination of tariffs on all wine from Australia. And this brought Australia onto a level playing field with many of its competitors, including Chile, the European Union and the US, who'd already benefited from zero tariffs. So, and since that time, Australian wine has enjoyed some steady growth exports to South Korea. And according to the Global Compass 2020, which was published by Wine Intelligence, which looks at ranking 80 different wine markets around the world, South Korea was ranked the second most attractive wine market in the world, a significant increase from the 10th position it held in 2019. And one of the main factors for the high ranking of South Korea has been in the growth in wine consumption over the past decade, as I mentioned, and from 2015 to 20, still wine consumption in South Korea grew at a compound annual growth rate of 8%, after growing by 6% between 2010 and 2015 as an annual growth rate. And at 0.9 litres per head, there is significant upside in wine consumption to be had in South Korea. And there are also more wine drinkers overall. According to Wine Intelligence, there were 6% more wine drinkers in 2021 compared to 2017. And there's also been a 31% increase in weekly wine drinkers over the same period. And there were 10.7 million semi-annual drinkers of imported wine in 2021, with 17% of them drinking Australian wine, which is up from 10% in 2017. Chilean wine leads with 51%, but the Wine Intelligence research shows, Australian wines are most strongly associated with being sustainable and food-friendly amongst South Korean wine drinkers. And part of our success in the South Korean market in recent years is that the perception of Australian wine keeps rising among wine drinkers. And according to our annual study that we engage Wine Intelligence to conduct, South Korean wine drinkers' quality perception of Australian wine has increased from 6.5 out of 10, so that's sort of rating the quality on a scale of 10 in 2017 to 7.23 in 2021. So really strong growth in their perceptions of Australian wine. And on top of that, the percentage of consumers who associate Australia with expensive and fine wine has also grown from 29% in 2017 to 44% in 2021. So some really positive results coming out of South Korea for Australian wine. Moving on to Taiwan. Taiwan is a highly urbanised country with a population of 24 million people. And at 2.1 million cases and a value of $394 million US, Taiwan is the 5th biggest wine market in Asia. The Euromonitor export report they produced recently reports that the retail sector accounted for 64% of consumption and food service with 36%. However, the alcohol market is dominated by beer and baijiu, but wine is growing, and around 85% of consumption is red wine in Taiwan. On-trade volumes sales took one of the biggest hits within the wine category from the COVID-19 pandemic in Taiwan in 2020. No surprises that the health crisis led to the cancellation or postponement of many events such as weddings and year-end banquets, at which wine is often consumed by guests. But to cope with the impact on food service channels, some companies shifted their focus to retail and offered convenient ways for especially high-end consumers to purchase their products, such as encouraging them to purchase directly from agents or importers. And while consumption across the food service channel is anticipated to recover in the coming years, and demand for higher and premium wines, including those from Australia, is anticipated to be boosted by specialist stores offering a broader assortment of wines for consumers to choose from compared to the past. And wine imports are expected to see a good recovery out to 2025. I should note that the Taiwanese market is highly fragmented. France dominates wine imports. However, there are multiple brands available from there and other countries and at various price points. Consumers have been accustomed to buying wine, mostly high quality wine from specialist wine stores. And some of these offer classes and invite experts to give talks. However, in hypermarkets, also began to hold wine events and run promotions for special and limited edition wines from around the world to attract consumers' attention and contribute to overall wine consumption. It is important to note online alcohol sales are not permitted in Taiwan. However, COVID-19 did result in alcohol being advertised online. But the payments were being made in cash on delivery to avoid violating any online sales restrictions. So even though they were advertised online, they couldn't actually, the transactions couldn't be done via that mechanism. So Australian wines are found in all retail channels within Taiwan, so the more commercial and mainly in stores such as Costco and mid-range and retailers such as City Super, and premium wines mainly in the specialist stores. European wines are mostly often listed on restaurant menus. However, there is an uptick in wines from other countries, and Australian wines are increasingly becoming visible within this food service channel. And despite sort of the commercial wines making up most of the wine sales in Taiwan, demand for premium wines has seen good growth. And just to note, Taiwan is a relatively low tariff and low tax market, and New Zealand is the only competitor with a tariff advantage over Australia. Looking at Vietnam, Vietnam is classified in the Wine Intelligence 2020 Global Compass Report as a sort of new emerging market, and one where wine is relatively new and an unknown product, but is showing potential. And in the rankings, jumped up 4 places in 2020 to number 43, and benefiting from a positive economic outlook and long-term wine growth forecasts. So while it does score kind of low on most wine market indicators, it was top in terms of IMF forecast GDP post-COVID, and one of only 5 countries to have positive economic growth in 2020. So it's really these economic indicators that are driving why we would look at Vietnam as a market going forward. According to IWSR, 99% of alcohol consumed in Vietnam is beer, with wine making up about a third of that remaining 1%. However, in a population of nearly 100 million people, this still amounts to an estimated 1.3 million cases, and the number of new consumers reaching legal drinking age each year is around 1 million people. Just around 2/3 of total wine consumption in Vietnam is met by imports. Vietnamese consumers perceive imported wine to be, of consistent high quality, and therefore preferred to local wine, especially amongst middle and high income earners. However, wine does face strong competition with beer. And most people choose to drink beer during gatherings, meals or parties, while wine is less consumed on these occasions. Australian wines are, though, known for their high quality, according to the Euromonitor research that was conducted late last year. However, consumers in Vietnam are less aware of Australian wine than those from the EU. And the average selling price of Australian wine is around Australian $20 per bottle, while the average price of French is 17. So we actually have a sort of higher average price than some of those competitors. Alcohol consumption through retail, including wine, was hard hit, not just by COVID, but by regulations that were introduced in 2019-20. There were increased fines for drink driving and restrictions on advertising of alcoholic drinks, which led to a shift in consumption trends. And then, throw on top of the restrictions and closure of the food service outlets in 2020 and 21 due to the COVID pandemic, definitely impacted on consumption in the food service channels. However, over 2021 to 2025, total wine consumption is expected to recover, with volume growth per annum of 7%, and growth is anticipated to be driven by the recovery of the food service and a large number of expatriates and tourists coming back as travel restrictions are lifted. And opportunities for Australian wineries in Vietnam may further increase in the next few years. Australia has a free trade agreement with Vietnam, which is formed under both the CPTPP and the AANZ FTA. And as a result, tariffs for Australia will drop from 50% to 20% on the 1st of January, will have dropped on the 1st of January 2022, and then gradually will drop to zero by the 1st of January 2029. So, Australian wines will become more competitive in that market over the next few years as tariffs drop away. Thailand. Thailand has a population of 70 million people, and at just under 1 million cases valued at US $263 million. Thailand is the 10th biggest wine market in Asia. Beer and local spirits dominate the market, with wine very much an emerging and niche category at the moment. COVID-19 definitely had a detrimental effect on wine consumption due to the loss of tourists and the restrictions implemented on the food service channel. The market is, however, expected to gradually recover from 2022 onwards, and the popularity of wine with local consumers and the expansion of key retail brands in both urban and rural areas is anticipated to benefit retail growth. While the return to normal of the tourist industry, coupled with Thailand's strong nightlife and restaurant scene, should provide a boost to food service sales in the future. Despite it not being known for its wine production, some of the country's wines have gained international recognition, and some local producers have invested in the quality of their wines by studying viticultural practices used other countries, such as Australia, and as well as using some imported foreign grapes in their winemaking. In terms of imports, we are the #1 imported category within Thailand, and Australian wine is widely available in both retail and the food service channels. And we enjoy a relatively high degree of consumer awareness, and we are renowned for our reliable quality. And it comes in a wide price and brand range, but is mostly known for its value for money offerings, with red wine in particular, Shiraz and Cabernet, the most popular wines for Australia in Thailand. And mid to premium Australian wines also starting to gain traction within the market. But as mentioned, retail consumption remains dependent on tourists, but there is increasing demand for entry-level wines from local consumers as well. And just on this, Thailand is a key tourist destination. There were over 39 million tourists to the country in 2019, and demand for wine is generally much stronger in the country's main tourist regions rather than amongst local consumers. But retailers are responding to this and have expanded their networks in key tourist destinations, which are mainly skewed towards imported wines. A 0% preferential tariff further allows Australian wines to be priced competitively compared to other imported countries. So it's up to 70% lower compared to US wines, which have a 54% standard tariff at the moment. In 2020, consumption volume saw a steep decline due to the loss of tourists, as well as the restrictions and temporary closures for the on-trade channel. And retail captured the majority of sales, close to 3/4 of volume share in 2020. And it is expected to grow further as wines see increased popularity amongst the local consumers as they grow with their experience with wine. And also the rapid expansion of retail brands in both urban and rural areas was also anticipated to contribute to the growth. And food service is also predicted to grow, driven by the anticipated expansion of fine dining, popularity of high-end open bar concepts in hotels, and then, as mentioned, the thriving nightlife in Bangkok, and as the tourist industry does return to normal. And the rise in young urban middle class professionals who may be willing to spend more on premium wine could also boost consumption in Thailand in years to come. Indonesia has a huge population of 270 million and is the largest economy in Southeast Asia. While it is predominantly a Muslim country, alcohol is relatively tolerated amongst the tourists. The wine market is emerging and is mostly targeted to wealthy Indonesians, expats, and tourists. No surprises that Bali is the biggest region for wine sales, given the concentration of tourists to that part of the country. The current market size is less than 500,000 cases, so quite small, valued at US $139 million. And it is the 12th biggest wine market in Asia. For Australia, we're the #1 imported wine category in both volume and value. And according to Euromonitor, wine from Australia has a significant share in both retail and food service. And it's renowned for high quality, wide availability, wide brand range, and affordability. And they also note that competition from other players is often limited to one attribute, while the Australian offering manages to cover multiple attributes. For example, local wines are renowned for their affordability but considered of low quality. French wine is known for high quality but considered expensive. Chilean wines do not have a broad product range and are mainly oriented towards affordable brands, whereas Australia covers a much broader range. Therefore, the exposure is much greater, and hence, being number one in the market at the moment. Following a decline in 2020 due to COVID-19 pandemic, wine sales are expected to see growth in both retail and food service in the future. The food service does account for the majority of sales, as wine sales are prohibited in most supermarkets and hypermarkets. However, with the exception of certain cities like Bali, that do allow wine sales in some of the more modern retailers. While retail sales mainly come from specialist retailers and online at a lower level. The robust expansion of the middle class, coupled with the increasing urbanisation, by 2040, it is estimated that 67% of the total population will be living in urban areas, is giving rise to a new consumer class with higher incomes and leading to much move towards sort of Western preferences, which favours consumption of products including wine, which provides some upside in wine consumption in Indonesia in the future. But currently wine is quite low, 0.01 litres per head. But I guess this is a much longer term view when you're looking to diversify, and the proximity to Australia as well. Indonesia is one of those markets that will look to grow over the next decade or so. The final market I'll touch on is India. There is a lot of interest in India as a future wine market, and I guess this stems principally from its enormous population and growing economy. More than 1/7 of the world's population now lives in India. And in 2020, the population was estimated to be 1.3 billion people, and is set to overtake China as the world's largest population within 40 years. Compared to other countries, it also has a low median age of 28.4 years and a relatively small proportion of older people. And this, coupled with rising life expectancy, has resulted in rapid population growth. India is also one of the largest economies in the world, ranking number 6 behind the UK and ahead of France, with an economy worth $2.7 trillion US in 2020. However, like most economies, growth took a hit during 2020, and a recovery in 2021 was hampered by another large outbreak of COVID in the first half of the year. But pre-pandemic economic performance is expected to return sometime in 2022. Alcohol is consumed in India, but it is dominated by spirits and beer. In 2020, Indians consumed 475 million cases of alcohol, and 58% of this volume was spirits, while 41% was beer, and wine made up just 1% of alcohol sales volume. Although total alcohol sales dipped by nearly 30% in 2020 compared to 2019, thanks to the on-premise and many liquor stores being shut, the market is expected by the IWSR to grow by 8% each year between 2020 and 2025. According to Euromonitor's Export Market Development Guidebook released recently for India, which is available on Wine Australia's website for levy payers and exporters, wine consumption is expected to grow from 29 million litres in 2020 to close to 56 million litres by 2025. And thanks to a rising middle class, increasing urbanisation, an inclination towards imported wine, and a shift in consumer preferences from hard spirits towards wine. And while there are 485 million people above the legal drinking age of 25 years, the penetration of wine at the moment is very low at around 2 to 3 million wine consumers. Australian exports are growing to India, albeit off a very small base. To put it in context, there were only 20 Australian exporters to India in 2021. And for those, Australian wine exports did grow by 81% in value to $12 million. and 72% in volume to 2.5 million litres. And, while this represents a record to India, it is still a very low volume and value that we send into that market. And the average value of shipments is $4.80 per litre. It's growing, and most of this is packaged, 99% in glass bottles, but still a relatively low average value compared to some of the other Asian markets that we looked at today. And the customs, as I mentioned very early in the piece, the customs tariff on wine imported to India is 150%, which does make it an extremely challenging market for imported wine. And there's also a raft of other regulations, which also makes it a difficult market to navigate. And the World Bank ranks India at number 62 in its ease of doing business index. And you compare that to South Korea ranked at 5 and Japan at 30. And further context, New Zealand and Singapore ranked number 1 and 2 in terms of ease of doing business. And our two biggest export markets, US and UK, ranked 8 and 6 respectively. So, it is tough doing business in that market with the tariff and also a lot of the regulations that are required. That said, there is some minor relief for Australian exporters to India, with the Australian and Indian governments signing the Australia-India Economic Cooperation and Trade Agreement on April 2, so just recently. And when this enters into force, preferential tariff treatment will be afforded to premium Australian wine imported to India, making Australia the first major wine producing country to negotiate such arrangements. So in accordance with the agreement, tariffs on Australian wine with a cost, insurance and freight, or CIF, value of over US $5 per 750 ml bottle will decrease to 100% upon entry into force, with a further phased reduction of 5% per year for 10 years. So we'll get down to 50% within 10 years. So it won't be going to zero, it'll be down to 50% over that 10-year period. And then tariffs on Australian wine with a CIF value of over 15 US per 750 ml bottle will decrease to 75% upon entry into force, with a further phased reduction of 5% for 10 years down to 25%. So again, not going to zero. So while it is a positive development, the impact on Australian exports is likely to be minor for two reasons. Firstly, the tariffs will still be substantial even after the 10-year phase down period. And secondly, they don't apply to all Australian exports. And currently only 3% of the volume of Australian exports to India will be eligible for the tariff reduction. But I will make the point that as part of the FTA, Australia is classed as the most favourable country, meaning that if other countries in years to come negotiate a better deal around tariffs in Australia, we will benefit from those. So we can sort of, ride off the coattails. If the EU negotiates a better deal than what we've got, we'll receive that same advantage because of our favourable country treatment. But just, if things do change, we are well placed in India as the number 1 wine imported category. But that said, I still think the opportunity for Australian wine in India in the short and medium term is quite small until, things around regulations and tariffs do change significantly. So that's where I'll leave the individual country focus. And I'll just finish on looking at some of our marketing activities in Asia coming up. Looking at ambassadors in Japan and South Korea. As part of AGW's ATMAC grant, an Australian wine ambassador will be placed in Korea and Japan for a period of 2 years. So this is not a Wine Australia initiative. It's an AGW initiative through its ATMAC grant. But Wine Australia will be working closely with AGW and the ambassadors to help support and amplify their activity in this market going forward. On the education front, with Australian Wine Discovered, 17 of the Australian Wine Discovered modules and their PowerPoint presentations are currently being translated into 6 Asian languages, so Thai, Indonesian, Vietnamese, Japanese, Korean, and traditional Chinese for Taiwan and Hong Kong. And all of these will be ready by the end of the financial year and downloadable for free off the website. A promotional campaign to support their release and encourage producers to use the materials and share with their partners in market will be happening as well. And we have been delivering some live tastings with our partners in a few Asian markets as pandemic requirements allow us, and we will continue to do this ongoing, hopefully on a greater scale and in conjunction with some events. And speaking of events, we have been delivering in market, new to market trade tasting events during the pandemic, working with Austrade and its posts. And we have delivered activity in Taiwan and Korea and have upcoming tasting events in Vietnam, Thailand and Singapore. And currently planning the return to in-person events in 2022 and beyond. And in planning, there's a Japanese tasting event and with an emerging markets roadshow. Australian Wine Connect. Connect will underpin all in-person trade events, including those in Asia, always positioning it as the always-on showcase of export-ready Australian wineries. And we're also scoping a translation tool to support Japanese and Korean languages. And on the retail promotion front, working with our state partners to execute more consumer-facing retail promotions in markets such as Korea, Japan, and Hong Kong. And export-ready capability to support producers thinking about adding an Asian country to their export strategy. We'll continue to provide market briefings in conjunction with Austrade posts, cultural training and an export-ready hub, which will be live in July 2020. And then when we can visit markets again, retail tours, and we'll also add our excellent market insight tools are available and guides to help you look at the opportunities in those markets. I'll add, if you want to learn more about these markets, the quickest way to talk to us in Market Insights is to book a time through our Ask an Analyst tool on our website, which kind of works like a health engine where you can just lock in a time that suits you, and you've got a sort of half an hour with one of our analysts, and we can talk through any issues or anything you want around these markets or other markets for that matter. And in India, just really advise you're working with Austrade and AGW on a program of activities. Nothing in place at the moment, but that this will be in play in the next year. So that's sort of where I'll leave it. If you do have any queries around the marketing activities, I'd encourage you to contact Wine Australia through the email address there, asia@wineaustralia.com. So we'll be able to answer any sort of questions through that avenue around the marketing activities.
Wonderful. Thank you so much, Pete, as always. So much fantastic knowledge and insight. And to be honest, just great to see that there are some really positive opportunities, which hopefully over the next 5 years turn into some really great news stories for Australian wine in the Asian markets. And, certainly I've certainly learnt just a better understanding of culturally drinkers in those different markets, because they are quite different, aren't they?
Yeah, and I should add that through AGW's APMAC grant, there's also some consumer research being done right at the moment in Japan and South Korea, which will really delve down into more detail around to bring more Australian wine, what some of the barriers are. So that project's underway as we speak.
Wonderful. And please, everyone that's online, Pete is with us today, so don't hold back on asking him some questions. I can certainly keep it anonymous. But to kick off question time, Pete, I've got a question here in relation to Korea market.
Yeah.
Is the value per litre high in Korea due to high-end product being moved on into China? Interesting question. So
I guess the question is some of that transfer the wines that we're going into China going into South Korea. The answer is some of it could be, but the main answer is that the growth to South Korea prior to China ceasing as a market was already high-end wines into South Korea. So the market was already conducive to taking premium Australian wine, and particularly red wine. So no doubt there will be some wines over the next year or so that would have been going into China that will find a home in South Korea. But that trend was occurring prior to China anyway. So hope that answers the question.
Great. Thanks so much, Pete. I'll give everyone an opportunity in case they do want to quickly type in a question before we wrap up. Pete, I wanted to ask you, Japan sounds like a really interesting market and an aging market. For the younger generation though, what are they drinking instead of wine? What's being replaced? Is it spirits?
I mean, they're drinking a wide variety of different alcoholic drinks, and wine being one of those, but they're not drinking as much alcohol overall. So I think that's a situation in a lot of markets, not just Japan, that younger wine consumers aren't drinking as much as the older generation did. So it's a challenge not just for wine but for other alcoholic beverages as well. But the good news in Japan is that those younger consumers are more open to experimenting with different wines from different countries, whereas the older cohort really were focused on French wines and older European wines and not so much in Australia. So it's one of the reasons that we had struggled to break through over the last 20 years, is it was hard to break that. They're only drinking French wine, but the opportunity, and hopefully through this research that that's being conducted at the moment, we'll have a much better understanding about what these younger consumers are looking for as well. So this research will definitely shine a light on what they're drinking, what will drive them to drink more Australian wine. And so hopefully when we then put programs in place and marketing activities in place, and wineries put strategies in place, they'll be able to use that information to better target those younger consumers going forward. So I mean, that's where the opportunity will be. And South Korea is similar as well.
Yeah, wonderful. And someone's just asked if they can get a copy of the report. If they're referring to today's presentation that Pete has shared with us, if you email me at wca@winecommunicators.com.au, I can certainly share a copy of that. Pete, if they're referring to the overall market report, I imagine that that's downloadable from the WCA, the Wine Australia website.
Are you talking about the Euromonitor reports I might have been referring to? Because they're available to download from the website. They're also available, I think, on the Austrade website too. But by all means, go to the Wine Australia website and they're available. You can also, by all means, contact us as well. So if you've got any other questions or any other data, I mean, I've only just touched on, very briefly on some of these markets. So if you want more detail, by all means, contact us on any of these markets or other markets within Asia too, for that matter.
Yeah, wonderful. Excellent. Well, thanks again, Pete. I think we'll wrap it up for today, as I know everybody's busy. Our next webinar, though, I do want to flag with everyone, will be on Tuesday, the 10th of May, and that's going to be presented by Sommeliers Australia. So it's going to be a bit of a different format, more of a panel discussion, but really getting firsthand insight into what these sommeliers in restaurants and things are looking for from Australian wine producers. So keep an eye out on the WCA website for more details on that one. And just a reminder, if you're a WCA member, all recordings from previous webinars are held on our website in the education section. And if you have any suggestions on topics that you would like us to cover in this year's webinar program, please email me directly at wca@winecommunicators.com.au. Thanks again for joining us, everyone, and I hope you have a great rest of the day.